and welcome back to another episode of the Globe Talks to Traders series, where you can learn the ins and outs of crypto trading. Today I'm delighted to welcome onto the show Pedro Birmann, co-founder of NDUK and Scrypt Solutions.
Thank you very much for having me here.
It's a pleasure. So let's jump right into things. Can you tell us a bit about yourself and how you got into the crypto sphere?
Sure. I think that, like many people in this space, I started in traditional finance. I've been a trader for most of my 14, almost 15-year career. So I spent time in both here in London and as well as in the United States trading short-term interest rates. I used to trade FX swaps, cross-currency basis, interest rate swaps, futures, options on futures, and all of those things. And then at some point, I think that crypto was something that kept on knocking on my door. And I think that I was a little bit silly because I didn't open the door soon enough. I'm trying to make up for that now. I think that the first time I heard about crypto was somewhere around 2013 maybe. I had an acquaintance of mine, a friend of mine that came to New York to visit us, and we were having dinner, and then he goes and says, by the way, I want to pass by this ATM that sells Bitcoin. And I said, ATM that sells Bitcoin, what is Bitcoin? And then he gave me like a two-liner, and I thought to myself, this is utter bollocks. This is not really a thing. But I went there, and I remember the first thing I noticed was he was trying to buy this Bitcoin, this machine, in this corner shop somewhere between Upper East Side and Harlem. And the price of Bitcoin at the time was around $100. And it was $200. And the bid offer spread was like 100 to 300. And I was like, this is absurd. You're not going to buy. Before I could finish my sentence, he was putting his money in the machine and buying the Bitcoin. And then I remember he put $300 there, and then a slip of paper came out with a QR code. And I was like, what you do with this? And there he lost me because he started talking about how you create a wallet. And then I said, this is too complicated. And I totally forgot about Bitcoin for the next few years. It was only in 2017 when I was working for Credit Suisse at the time. And I remember that Bitcoin was becoming mainstream again. It was everywhere in the news. You had people talking a lot about Bitcoin because it was the first time that we had that huge, it wasn't the first time, but it was the big parabolic rise that went to 20K. And I remember walking on the trading floor and seeing every single Bloomberg terminal had a Bitcoin chart. And I said, there is something happening here. And around that time, I tried to understand a little bit about Bitcoin, but I was very skeptical. I thought it was a Ponzi scheme. I said, this is utter rubbish. Nobody's going to invest in this. Nobody with the right mind. And unfortunately for me, Bitcoin crashed. And that served as almost a vindication. And I thought, of course it would crash 75%. Of course, this has no intrinsic value. And that was probably the worst thing that's happened in my life, because it took me another 2 years to actually start to understand a little bit more about what Bitcoin was, or the technology, or blockchain, or other crypto assets. So I forgot about Bitcoin for that entire bear market from 2017 to 2019. And then at some point in 2019, we started to see once again Bitcoin rising and cryptocurrencies in general rising. And what got me to look into this time was one of my colleagues who used to talk a lot about Bitcoin. And quite frankly, I didn't really agree with most of the stuff that he was talking about. It didn't make any sense from an economic perspective. He used to give some arguments that were nonsensical for me. But then I decided I'm going to study about this now. I'm going to deep dive into crypto and Bitcoin just to have an argument. Next time he comes talking something positive about Bitcoin, I'm going to annihilate him on this discussion. And that's when I started. I started reading about, first about Bitcoin. Then I went, I said, all right, let me read this white paper. And then I read the white paper by Santosh and I said, you know what, this is actually quite clever. This is amazing. This is very good. And then I went, let me read the white paper of Ethereum. And then let me start listening to some people whom I respect. And then the first one was Silvio Micali, that is a professor from MIT, the guy that created, that founded Algorand. And he is brilliant. He's one of the guys that won a Turing Prize for his work in cryptography. So these are very, very smart people. And when I started listening to those guys, then it clicked. So I went into crypto to try to prove that was a Ponzi scheme that had no value. And then all of a sudden I was totally hooked. And I realized that was an amazing proposition. Is the technology powering cryptocurrencies is fantastic. And then ever since I've been trying to do this on a full-time basis. And we started our companies exactly to do that.
Yeah, awesome. It's funny how you say you were a skeptic because you didn't understand.
Absolutely, yeah. You know, the interesting thing, and I think that this is a very important point, I think that like many people, I was very skeptical because I didn't know anything about it, right? When you hear, oh, it's a digital form of money, no, it isn't, because you cannot use anywhere, and it didn't make any sense. But the moment that you start reading about it and you realize that the people working on this space are probably the smartest people we have in the world right now, are trying to solve problems related to blockchain technology, then you realize that there is something, right? I think that blockchain is truly a general purpose technology that will be widely used in many areas of the marketplace. Not only in finance, not only as an investment, an investable asset, but also something that will resolve or solve many of the problems that we have in many areas today. So I don't know anyone who was skeptical that after I talk to them or I get them to listen to some podcasts or deep dive and do some research, that they turn around and they are still skeptical. You see what I mean? So I think that was the most important thing for me, the fact that you have a lot of skeptical people, but probably because they don't know what they're talking about. The moment that they do a research or investigate a little bit further, I think that most people tend to become believers of this new technology.
Awesome, yeah. So you've been in the crypto space for about 3 years now?
Something like this, yes.
Awesome. And so you were in TradFi for about over a decade?
15 years.
So what would you say the kind of general sentiment on blockchain is in TradFi? And
I think that I was a perfect example of how people feel about this the first time they hear about it. I couldn't comprehend how can something have some intrinsic value if it's not an official tender or it's not issued by or backed by a government. I was so naive. Exactly because I wasn't understanding what was the value proposition and why it was created in the first place, and was created exactly as an alternative to all of those things that I was talking about. And I remember I think that the managing director, the guy that was in charge of all trading in my last firm, he used to go around the floor talking very poorly about Bitcoin. Well, this is ludicrous. Why would anyone? And I remember we had some of the economists sometimes or strategists, they would mention Bitcoin in research papers. He would make them remove the stuff. He would get really aggravated about that. And I think that was perfect for me because I tend to be a contrarian, and whenever these guys are very vocal about something, I decide to do a deep dive into the thing. So all of those things helped me understand a little bit more. And I think that the people in TradFi, they are now coming away from that mindset. I think that you have younger people coming on board. You have people that understand a little bit more. So I think that we are seeing a rapid change in the environment, right? Now you go around, I don't think that there is any doubts that this is here to stay. You have, the largest hedge funds in the world are getting ready for this. If they are not already fully invested in this, you have, the major banks, at least the American banks, they tend to be at the forefront of this move, offering crypto exposure to their clients. I think that we've come a long way, and I think that this is just the beginning. I think that you have a long way to go. There is lots of opportunities out there.
Awesome. Yeah. So what would you say are your key lessons that you've learned from TradFi? Trading specifically.
Yeah, absolutely. I think that the most important thing, which is somewhat goes against what you hear about crypto, especially when you look at influencers talking about crypto, how they make 100x, and I think that the most important thing is for people to that they need to have a system in place. Things like 100x returns are not really sustainable, and this is not the way to go about trading, right? You need to have a system in place. You need to be methodical about how you value an investment. And I think that this is exactly the same thing in the crypto space. There are ways for you to analyze the market. There are ways for you to extract value. But one thing that you need to have, and this is the lesson, is discipline. And you have to have a good way of managing risk. You have to manage risk in a systematic way that allows you to actually deploy capital very efficiently and extract value from any of those opportunities without going bust, right? That's what you, especially on the retail side, you have a lot of people that are doing some crazy things. You need to be very careful. I think that if anyone that's listening to this, you do need to have a lot of discipline. Market risk is a huge thing. Counterparty risk, you need to think about this, right? You have protocol risk now. You need to think about any DeFi projects that you're investing. Could there be a bad line of codes? Could there be a hack? Yes, absolutely. So you need to think about all of those things. And you need to quantify those risks with the rewards that you are getting. If the risk reward is there, and if you have good discipline, absolutely, you should try to exploit those things.
Awesome. So let's talk a bit more about risk management. So are you talking about market neutral strategies here?
So when we started, I remember thinking, so the annualized volatility in most of the top 5 cryptocurrencies is not to be uncommon to be over 100% annualized. This is like unheard of when you look at traditional finance, right? Even if you're trading Turkish lira and where you have huge volatility, it's not comparable to crypto. So myself and my partners, whom are very, very technical, very intelligent guys, we decided to try to take a different approach. Can we create strategies that are delta neutral, market neutral, that allow us to generate excess returns, and I'm talking about high double-digit returns to make this worthwhile, with a fraction of the volatility. So we're talking about Sharpe ratios at least of 3.5 for any of the strategies that we are deploying. So when we started, obviously everybody, if you remember, you could trade derivatives, futures, for instance. There was this easy money to be made where the curve was in contango. There was a lot of yields to be extracted from the curve, and was pretty straightforward to do it. That was how we started. And then immediately we realized a cash future basis strategy is going to help us now in the beginning, but this is absolutely not going to be sustainable. We need to make this a little bit more sophisticated. And then we started to deploy a lot of statistical analysis, our algos. This is exactly what we do. We create algos. We are quant funds at the end of the day, and we try to exploit these opportunities. And if you're thinking about this, any quant fund is created to exploit market inefficiencies. there is nothing more inefficient right now than the crypto space. You have hundreds of exchanges, you have thousands of currencies, you have liquidity that is fragmented across locations. You have all of those things. So we figured out, right, we can do a bunch of other strategies, and then all of a sudden you are doing arbitrage strategies. You are doing, we can do some funky things with statistics where you are trading baskets of different crypto assets, and you are playing with the correlations of those assets. So you are long and short the markets, and you are able to extract some value. But once again, you need to have a tremendous rigor in terms of how you manage your risk, how you use leverage, for instance, in some cases, and most importantly, how you manage the collateral across exchanges and how you manage that credit risk that you have with exchanges. So it's quite interesting, but this is what we've been doing. And then it turns out that even in the bear market, we are still able to generate very, very reasonable returns with a fraction of the volatility. And I think that this is the key thing for us, right? Is to get high returns with a fraction of what people are seeing in the markets in terms of the risk that they are taking on board.
So after kind of venturing into crypto, what were the problems that you found?
I think that, coming from TradFi, when you work for a hedge fund or a large bank, you have robust trading systems. You have access to liquidity. Even if you have multiple liquidity providers, you have platforms that allow you to connect to these liquidity providers. You have software that assists you with projections, managing risk, building curves. You have everything that is there to support you in this trading journey. In crypto, first, the derivatives, the derivative space is quite new relative to crypto itself. Right, you could buy spot Bitcoin or Ethereum, but it's quite recent that you can trade options and vol and futures on those products. So when we started, the biggest challenge for us was that we couldn't quite find an offering in the markets that was comparable to what we had in our day jobs working for large banks. And then we started looking for the companies that are in the space. You have several companies that offer solutions to some of the problems that we had. We were thinking about three main areas. That one was execution, the other one was security, and the other one was portfolio management capabilities when we started, right? I want to see my risk. I want to see my risk in the right way. I want to be able to reval my positions with an independent curve that I trust, and we couldn't find any of this. And then on top of that, we found a lot of challenges. We want to exploit inefficiencies across all of these different liquidity providers. You have centralized exchanges, you have decentralized exchanges, but there was a challenge in how we could efficiently manage the collateral that you need to deploy in each of those exchanges. So we realized that there was nothing in the market that met the standards that we were looking for. And that was when NDUK, that's the other firm that I co-founded, was created. The idea is that we thought we could build better. So NDUK, my partners are some of the brightest people in the market. I have, two of them are originally from Brazil. They held very senior positions in the largest investment banks in Brazil, and they were all about the infrastructure, payments infrastructure, risk management infrastructure, trading capabilities, all of that kind of stuff. So we partnered with these guys and we created the systems that we have been using in our funds. There is another fund that uses our system at the moment, is helping us to beta test and improve what we are doing. But essentially we created a system that allows us to deploy our quant strategies in a very efficient way that helps us to mitigate counterparty risk by managing our collateral through algos. So it's something that there wasn't anyone in the market offering. So this is what we've created with NDUK. This is something that we are considering making it available for others, right? Is a source of alpha for the funds, but in itself is definitely a product that probably deserves to be made available for other institutions and other sophisticated retail clients. So that's what we've been doing with NDUK.
That's awesome. It's nice to see how you're actually solving a problem that you've gone through yourself.
Because, No, absolutely. I think that the most famous startups in the world started exactly like this. A problem that was found by a founder. The guy that created Airbnb, he couldn't get a hotel room in San Francisco for a conference, whatever. And then why can I not find someone willing to rent me a room, Uber, all of those guys. And for us, definitely, the market is very fragmented. You have some very large startups that have raised a lot of capital, but they are focusing on one or two areas. And generally, the biggest investments that we are seeing in this space are regarding custodial services, which is very important, don't get me wrong. But we are not seeing much of all of the other things, right? How do I integrate everything? Why do I need to have multiple exposure to multiple platforms? That's absurd. I want to have one system that I can rely on that connects to these liquidity providers and allows me to seamlessly trade, allows me to have total visibility of my exposure to each of those liquidity providers, allows me to manage my collateral exposure in an efficient way, and ultimately, makes us better traders. And that's how this whole thing started.
Awesome. Thank you.
Thank you.
So apart from reducing risk for crypto traders, what other problems is Scrypt Solutions solving for traders?
So if you think about it, I think if you want to be involved and have some crypto exposure, there are a few ways you can go on about it. Most people will buy some digital assets, right? And that's perfectly fine. You can do this, but even to do that is complex, right? You need to understand, the security issues that you have in holding a hot wallet with one exchange, a centralized exchange. You need, I can use decentralized exchange, fine, but go set up your MetaMask wallets and tell me if that was straightforward. It's not exactly straightforward, but you can still do that. You can buy crypto, and then you are exposed to this very decent potential upside or not, but there is a lot of volatility. And then you have guys that are trying to trade the markets. You have both on the institutional side or on the retail side, but that demands a lot of time and discipline. You need to be doing this virtually on a full-time basis, not to get absolutely obliterated in an adverse market move. So Scrypt Solution comes exactly for the people who want to have exposure, who are not exactly okay with the potential of losing 50% of their capital, which is what happens if you are in a fund that trades directionally long or short, right? So if you have a fund that deploys a different type of strategy, they tend to be exposed to these market swings. So some investors are not okay with that, and those are the guys that we were targeting. So we offer a product where we have a group of incredibly capable people. We are, mostly coders and former traders and quant traders, especially. I think that everybody on our team, they are very technical. They all code. They all understand high frequency trading. They all understand quantitative methods. So we are professionals. We are people who have been doing this for decades. So we do know what we are doing, and we are able to manage the assets and the exposure for those clients, right? So we offer a product that is straightforward for people to understand. Our goal is to create multiple strategies to harness, to extract value of the inefficiencies in the markets. All of our strategies, they need to meet a certain criteria in terms of the expected return versus the risk that we are taking, right? So if you look at risk-adjusted returns, it needs to be significant. And we are doing exactly what we say we're doing, right? We have people looking at this 24/7. We are managing the assets. We are taking care of all the complication, the difficulty in trading highly volatile assets. And we are doing this on behalf of our clients. And I think that this is the problem we are solving right now.
Awesome. So would you say your demographic right now is more institutional or retail?
No, at the moment we are dealing with high net worth individuals. And obviously we just launched the fund at the moment. I think that is something that there is a lot of scope to grow our partners. Some of our partners are based in South America. So we see tremendous potential, especially in the Brazilian market. Is something that we want to try to capture some of that. I think that the companies that are established there mostly are focusing on things like ETF solutions that are simple for retail clients to use. Is passive investment strategies where they are getting a management fee or something like this. We are offering something different, right? We are offering an actively managed fund, a quantitative fund. My hero from the TradFi world is Jim Simmons. That is the guy that created Renaissance Technologies. And this is what we want to be. We want to be the Renaissance Technologies of the crypto space.
Awesome. Not a small feat, no.
No, absolutely not. It's huge. You need to aspire big, right? That's the idea.
So do you trade personally then?
Absolutely. Ironically, my personal trading is very different from what we do at Scrypt, right? I do take a lot of directional risk.
So why is it then that you personally, you take more risk for yourself in a directional?
Yeah. So I think we need to look at what is the demand on the market right now, and I think that most of the funds that started, even if you look at Pantera Capital, when they started, it was like massively directional, and they did incredibly well. But you have a bunch of these funds that are doing exactly that, right? Oh yeah, this project has the potential to do 300x. We're gonna go long this or go long that. And if you use discipline and you can offer that product, and there were a lot of these funds out there. Nowadays there is a lot of delta neutral, market neutral funds as well. But I think that is something that's there was a bigger lack in offering in the marketplace, and we thought this is something that we can do really well. It's something that is where our expertise is, and let's start with this. It does not mean that in the future we wouldn't launch another funds that would focus on different strategies. That would have a different objective. Right now, our objective is exactly high Sharpe ratios, low probability of drawdowns relative to the market. But in the future, we could definitely do something different. From my personal portfolio, the difference is that I am incredibly risk tolerant. I tend to trade to take a lot of risk in some instances. And one of the best trades that I did was right in sometime in 2019. We were looking at I was looking at Ethereum, and then I was like, what is the value proposition of this blockchain? And then obviously it's everything that's being built on top of it. It's a huge platform, and then I started looking at the value of all the independent dApps and protocols that were built on top of Ethereum, and they were far greater than the value of Ethereum itself. And I said, this is fundamental analysis here that I can do on crypto assets. And yeah, I went massively long at the time. No advice here, no investment advice, but it paid off. And I was buying Ethereum at $300, $400, and we managed to capture all that rise. I managed to capture all that rise to 4K at some point.
Wow.
Yeah.
So you said your risk tolerance is quite high, but not everyone is like that, of course. So how would you say that? What have you found is one of the best ways to, keep your emotions in check while taking on risk?
Spot on is discipline. You need to have a systematic approach to how you take risk, right? And the first thing is try to establish a time horizon, right? If your time horizon is 2 years, your trading style will be very different. If it is 1 month, 1 week, 2 days. Right, and when you have a systematic approach, I think that this is a level where things make sense to buy. Do I have any confirming indicators that we are in a trend reversal or something like this? You can look at a bunch of things. You can look at on-chain analysis. You can look at how perpetual futures are trading, funding rates. You can look at many different things. And if you have a system in place, when all of those elements that you've set for your criteria are met, is when you enter trades. And you need to have the same set of criteria to exit that trades. If you have a system in place and you are faithful to that system, you are more likely to be successful than not. So I think that this is what people need to have in mind. You need to have a system in place. You need to be very diligent in how you are deploying capital, how you're managing risk. And I think that this is by far the most important thing for anyone out there that wants to trade on their own without the help from someone like me or a fund or whatever. If you want to do it on your own, that's perfectly fine. But have a system in place.
Awesome. So no FOMOing in and out of positions.
Absolutely. I have to say, in my 15-year career in TradFi, even the times that I had the worst moments in my career were exactly those where there was some element of FOMOing into one position, right? Oh, someone is making a lot of money with this position, and then you read some, okay, I'm going to put some risk on this. And then, believe me, every time that this happens, there is some element of FOMOing into trades. So absolutely not. You should never FOMO into anything. And let's be honest, if you do believe in this technology, we are at a market cap of, 1 trillion right now. And if you look at the adoption rates, HSBC just put a report out saying something like, by 2023, you would have another 500 million people that would be investing directly or indirectly into crypto. So if you think that something has 100x potential, right? I don't think that there are many things with this potential personally, but if you are one of those people, you missing the first 2x is not going to be the end of the world, right? But you wait for the confirmation of all those other indicators that we discussed before, and once all the stars are aligned, you enter the trades, but never for FOMO, absolutely not.
Awesome. So to finish off, can you give us your most and least optimistic price predictions for the majors?
Absolutely. First, price prediction is something, I'm not going to give you a price prediction. I just changed my mind because this is a recipe for failure. What I would tell you is this. Right now, I think that we are macro driven. I think that the macro landscape is a total mess. We are talking about unprecedented levels of inflation. We have a war energy crisis in Europe, that we haven't even started to scratch the surface of how bad things can get, especially coming into winter. So on a personal level, do I think that we are going to enter a bull market before all of those other things are resolved? Absolutely not. I think that this can drag well into next year. But from a fundamental level, I am a strong believer in blockchain and in the value of certain assets, digital assets. So I do think that if we are talking about a 5-year time horizon, I think that we are very likely to retest the highs that we've seen and probably go through those highs. I think we are still yet to see something that solves, the blockchain trilemma, a blockchain that is scalable, is decentralized and secure. I think that you have some very smart people trying to create things, but there is always a compromise, right? You have Solana, we can process God knows how many transactions per second, but the network every now and then isn't there. You have Ethereum, who from a layer 1 perspective is not really scalable, but then you have all this layer 2 sharding and all the things that they are going to do, and by far they are the largest blockchain that offers smart contracts and dApps and all of those things. So for me, Ethereum is the one at this very moment, despite the massive risk that we are going to see this week with the merge, is the one that I am probably the most bullish. Right, I'm not going to give you a number, but I do think just from the fundamental argument of it, right? If you have something that is, there is an element of supply and demand, obviously, for the price, and then all of a sudden you say that you are going to decrease the supply by 90% or whatever it is after you go to proof of stake, I think that that's definitely going to put some upward pressure in the price. And I think that if you do solve the issues that you have with gas fees and you have wider adoption and you have developers building more stuff on top of the Ethereum, I think that is one of the currencies there with the greatest potential for the next 5 years.
Awesome. You seem very bullish on ETH.
I am, yes.
Thank you so much for watching, and if you enjoyed the content, don't forget to give us a like, comment and subscribe. If you'd like to try out crypto trading, don't forget to have a look at Globe Exchange. Happy Globe trading, and I'll see you next time. Bye.